Hey, what's going on, best ever listeners? This is your host, John Casman, here with the Multifamily Mastery Show. And I'm excited to bring you today's guest, Matthew Teifke. Matthew, how are you today, man?
I'm great. I'm excited to be here. Thanks for the listeners. Thank you for making the space, and excited to add value, man. So I enjoy doing podcasts and, doing whatever I can. So thank you for having me on.
Yeah, man. Excited to chat with you today. And did I get your last name right? Is it Teifke or Teifke? Did I say it right?
Second one. It's a tricky one, man.
Yeah. I heard myself say it. I was like, I don't think that's what we agreed to in the green room. Teifke, right? All right. Well, Matthew, listen, for our listeners who are not familiar with you and your story, why don't you take 1 minute and fill in some of those gaps?
Okay. We'll start the time clock. So my mom grew up single mom, and she was cleaning houses when I was a little kid. I grew up with her doing that. And by the time I was 18, she had a significant amount of property. She had 15 or so rental properties. And I was inspired early on. I got my license when I was 18, traditional residential real estate license. And I was really focused on learning everything I could about how other people bought and sold real estate. Ended up getting my master's degree in real estate from Texas A&M University. I worked at a commercial real estate brokerage called Edge for 3 years. And then I started my own brokerage called TRE, Teifke Real Estate. And we got up to about 180 agents at the high point of it. We were managing third-party single-family homes. And then I started TR3 with Robert McLeod and Alex Kaufman, my two partners. And we started buying larger deals. So before that, I was buying houses, and then I'd buy a duplex and a fourplex, and just really kind of scaled up to a little bit bigger on each deal, to now where we're buying 1,000 doors this year on the low end, probably, if God will allow it. There's a lot of challenges and things that take place. But real estate since I was 18, I'm 34 years old, married with 2 kids, 2 little boys. And I feel blessed to be here with you and to be in the real estate business. And I'm sure we'll dive into it, but it's fun. It's a blessing. But man, there's so many challenges and none of it's easy. There's always a new challenge, and very collaborative on just trying to work with people and help any which way that I can.
Yeah, man. I love your background, right? You talked about your mom being a single mom, cleaning houses, and turning that into building up her own rental portfolio. You saw that, learned a quick lesson, decided real estate was your thing. You're a 16-year vet at just 34 years old, right? So you've been doing this since you're 18 years old. And I think there's a great lesson there. If you could lock in and focus early on, especially when you don't have the kids and everything else, like you can really just grind away and build something really nice. And you've been able to do that. You mentioned your goals to acquire about 1,000 units this year. Talk to us about just kind of how you look at the marketplace today, and what is your strategy to go forth and find those 1,000 units that fit your criteria?
Yeah, so I'm under contract on 1,000 right now.
Oh, there you go. Sign a contract. Yeah. Strategy.
Yeah, so I'm hopefully closing 216 units tomorrow. All of these deals that I'm under contract on right now are in San Antonio, Texas. The way that I'm looking at the market is, this is the best time that I've ever been in the business to be finding deals. The dynamics of people that acquired properties in 2020, 2021, they most likely paid a price that's significant over what it's worth today. So now the debt payment's due, and they've got to either refinance or their rate is adjusting. So there's a lot of motivation from sellers. And it's not because the properties are bad. It's really because the debt's not good. So I'm looking for those deals, and there's a lot of them out here. Now you can call brokers and say, I'm looking for a motivated seller, and then they get it. Where if you said that 4 years ago, 3 years ago, 5 years ago, they wouldn't give you any time. So I would, in the spirit of like trying to inspire people that maybe new that are listening, now is such a good time to be building relationships and talking to brokers. I wasn't able to be selected or even considered as a buyer for these deals a few years back. I'd be one of 10, and I didn't have a track record of larger deals at the time. where now I've got my foot in the door. The brokers have known me for a while because I started talking to them 10 years ago. And we're realizing that there's very little competition. My general belief, and this is really not based on, scientific metrics other than just living and breathing this, is that we have a window, I believe, of like 8 months to acquire these deals before things get hot and it gets harder to buy these. And there's all these dynamics where the deals are great, but some capital's scared. So you got to find the capital that looks for opportunities in the market and is kind of entrepreneurial in its mindset. And so there's deals and there's capital, and there's always a challenge on one of them, right? When the market gets hot, then it's hard to find deals. But I just think now is the most important time for, in my opinion, the next 10 years to be stealing deals. I mean, I said 1,000 would be low, and we're under contract on that, and I'm trying to buy like 2,000. And so it's an exciting time to be an investor and to be a hustler. There are challenges, but like I think now's the time to strike. We're buying properties at $80K a door, $70K a door with $900 rents, and they cash flow immediately. Whereas a couple of years ago, when everybody was buying these deals, they were really anticipating that the market would keep going the same direction it was, and then the deals would make sense. Whereas now they make sense right now.
Yeah, Matthew, you hit on a couple things, right? You mentioned, and I love the quote, the way you said it. You said, this is really the best buying opportunity you've seen since you've been investing for 16 years. So in 16 years, this is the best buying opportunity you've come across. And you think this window is pretty short, right? It's maybe an 8-month or so window to get out there, and there's not as much competition. And the thing that's driving this isn't really necessarily the overall market. It's not that these deals are bad or the properties are bad. It's just the debt situation. People bought these deals with bridge financing or short-term debt. The interest rate shot up. The numbers just don't make sense today. But you can come in with brand new debt, a brand new approach, and the deals pencil out of the gate. And that's an opportunity that I think excites investors in this current environment. But if you just listen to the noise, you may miss this, because I know a lot of folks are sitting on the sideline. They don't like the current environment. But I think you're seeing that there's great value because you keep your ear to the ground. Can you talk more about that? Because there is a difference between just looking at the data and the science and all of the numbers and the CoStar reports, and just being active and talking to brokers and analyzing deals and understanding what the market feedback is, and, just being on the day-to-day, the boots on the ground, and just seeing it with your own eyes. Talk to me about the contrast in those two approaches and what you're seeing today.
Man, so you get the best of both worlds, where the numbers, depending on the way you structure these deals, and I can get into that. But if you know the motivation's there, that's a really good first starting point. When people were selling, I mean, just you have to contrast these when I'm thinking about it, of 4 or 5 years ago, when they were selling and you told them that it didn't make sense and you couldn't get its pencil, they didn't care because they knew somebody else was going to buy it. But now when you tell them it doesn't pencil, they have no other options than to figure out how does it pencil, because if they're selling for a reason. So you take the number one, the motivation, and then number two, you figure the facts of real estate show that real estate is a great long-term play. It's not something that doubles overnight, but it doesn't go to zero. And the really, in my opinion, the only way, you could probably poke holes in this, but just run with me on this. The only way to really lose money in real estate is to have bad debt. So if you get good debt, then you're going to be in a good situation. So for example, one of the properties that we're buying right now, we're buying it at 4.32% fixed debt for 6 years. And so you say like, well, why is the seller selling? Well, this is one property that he can sell, that he can get a little bit of equity on, that he can go use to sustain his other properties that he's trying to keep. And what he's doing is he's buying rate caps to keep the rate down. So there's all these sellers that are just hanging on, and whether they can hang on long enough or not is the challenge. And, because it all depends on when they can refinance and get better debt. But when you get the fixed, or when you buy these rate caps, you can get them to pencil now. And then you can just say like, man, for me specifically, Austin, Texas, San Antonio, Texas. These are good long-term markets. These are growth markets. San Antonio is the seventh largest city in the United States. People don't realize that, and it's affordable. And so when I was in the market for the past 16 years, there's hundreds of buyers. There's institutional buyers. But right now, they're not out here actively hitting the streets, chasing these deals that I'm going after. I don't know if they're too small or they just, just aren't active. I'm not sure, but I'm seeing real time, hey, we might be the only buyer or one of a few buyers of deals. And so then you see when somebody else is buying a deal, who is it? What are they paying? I go to their webinars. How are they raising money? Are they going to drop the deal? You're able to like fully know the full landscape versus when things are crazy and there's 20 buyers. I mean, I'd love to know who are all these 20 buyers and how are they buying these deals, but it's impossible for me to know because they're secretive and there's too many. Whereas when the things are the way they are, it's kind of like full disclosure. Everybody's full disclosure to get things done.
Yeah, Matthew, you hit on a couple of things, right? I want to break it down. So the first way I want to talk about it is really identifying opportunities. The second way is going to be competition and credibility. So let's start there, right? You said that for you, you're focused more on the story. What's going on? Why is this person selling today? Is it a motivated seller? And if it is a motivated seller, you know that you can get creative and you can work with that person because you may be the only buyer that's actually actively negotiating with them versus, again, a few years ago, you're one of 20 groups, right? And they don't care. They just say to get in the back of the line. Your offer wasn't good enough. Go kick rocks and don't worry about it. But today they're coming back to you saying, hey, man, do you think you can get your offer up a little bit? Or, hey, can you maybe put some more money down here? And now you have a chance to actually broker a deal and make that happen. Whereas in the past, that wasn't the case. For folks who are trying to identify the right opportunities, to identify those motivated sellers, what questions should they be asking?
Yeah, well, number one, you can just be straight up like, hey, John, this is one of the worst markets to sell. Would you agree with that? Right? Like I'm you're the broker, right? Would you agree with that? Yeah, you're right. Okay.
A broker's got to soften it up a little bit. It's like, it's not the best time to sell.
Yeah. So, yeah, I agree, man. I mean, how many people do you know that are active? Like, what's the last deal you closed? Right? Like really diving into that. And then it's like the questions just lay out like, I'm not making this up. This is just straight up fact. Right? They probably don't know that many buyers. They probably are not closing many deals. They're going to agree that the market's not great. So you literally just walk them through that to get them there with their own answers. And then you're like, so why would you be selling? Like, why is the seller selling right now? I don't get it. And then they just tell you, dude, that's due. He hadn't made a payment in 3 months. Like, it's really, there's no secret to it. And that's what I would hopefully encourage the listeners today is like, I'm telling you, in a year, 2 years, you're not going to have these same conversations. The brokers aren't going to give you time. They're not going to want to be your friend. None of it. And so now is just such a good time to be it's literally just action based, right? Like, yeah, there's some technicalities and we can go through that. But it's like I just mentioned, like market's not good. Who's not buying? How are you trading deals? What are they trading at? And then just diving in on like, hey, man, there's a lot of opportunities. Like I'm looking for the best one. What's the best one that you got? And the biggest one? How do I make a splash? And how do I become a large player in a year or 2 years? How do I become one of the largest owners in San Antonio or Austin? Just being straight up with them. And then now they're getting their wheels spinning because they're not finding a lot of people that are thinking like that. So it's like they get off the phone and they're immediately calling all the largest owners that they know to really dive in and find out what's going on.
Yeah, and are these off-market opportunities or these listed deals? How are you deploying this strategy?
They're quasi, I mean, you give me your take, but I don't even really know what that means anymore. Is it off-market because it's not listed on their website? But at the same time, their dads saw it, their uncle's seen it, the other two buyers that they know have seen it. Like, what does it even mean?
Yeah, yeah. So it's definitely out there. I mean, it's an interesting term. We all kind of wink at it a little bit, but your point is that you got to have these conversations, get out there, ask the questions, and find out what's available and why is it available. And it's interesting too, because what we've seen is very similar to what you described, where sometimes you'll see a deal that does make sense, and you're asking yourself, well, why are they looking to sell right now? And the answer to that question can be enlightening. And sometimes you can get a straight up answer. Sometimes you got to wait and get the runaround. But there are groups who are selling the good asset to maybe save some of the other assets that are underperforming given the current economic situation. And that's something that you've got to be on the lookout for as well, because again, you're trying to find the right opportunities based on your own business plan. And those deals are out there. I would also say on the flip side of that, there are probably groups that are monitoring the market and maybe anticipating an increase of supply coming online here as far as deals and investment opportunities. And maybe they want to get ahead of that, or maybe that they see some changes in the marketplace and they see this as an opportunity to either right size their portfolio or do exactly what you're doing and free up some capital, because they're like, hey, you know what? Why don't I sell a few of these so we can go out there and get some bigger stuff? Because we do believe that there's going to be a lot of opportunity out there and we want to go ahead and level up our portfolio. So I think it goes back to what you said. It's a great time to be buying if you have the right lens to go out there and seek deals and understand what you're trying to do with your portfolio. The second thing you started to talk about was competition and competitiveness, and saying that, hey, some other groups may be sitting out. So now maybe you're one of only one group or a handful of groups that are bidding on some of these deals, whereas in the past, it might be 20 groups who are putting in offers. Can you talk about kind of the change in that landscape and how you think this is going to put you in a better position to go out there and find deals?
Yeah, absolutely. And then I'll touch on one other side topic a little bit.
Yeah.
Well, really the opportunity that I see. So my thesis, and listeners and you think through this and tell me what you think if you want. But basically, anybody who was acquiring in 2020, 2021, 2022, and was pretty active, there's no way that I can see that they're not in a really, really tight spot. I mean, even if they bought it cash, like they might be getting a small return, but like rents have gone down a little bit. Prices have definitely gone down and the debt's significantly changed. So all of those people that would potentially be competition, they're dealing with challenges that they're trying to figure out, like, what are they doing? Are they going to lose everything? There's multiple people and big players that, have basically signed their portfolio over to attorneys and they've just disappeared. Like they're just gone. There's some people that are in bad spots that are being honest about it and saying, look, I'm here. It's hard. It's not good, but I'm moving to live in this area, to live at my property to solve the problem. So those are the sophisticated players that were active. They're not any longer the competition. Maybe some of them, right? Like you said, maybe they sell something and try to buy something bigger, but they have such a big problem. It's really bad. There's not an easy solution here. Every property that I'm under contract on or that I'm closing on, we're buying for multiple millions less than the seller paid for it a few years ago. So that's the competition. Is they're like not even in the game. They're like playing a different game. And then now it's just a wide open landscape. So what the thing I wanted to switch to a little bit is like the challenge right now is not finding good deals. The challenge is actually finding capital. That's the new challenge. Whereas it's just so kind of backwards. And that's why it's good to think contrarian in a lot of ways as an investor. But when the market turns and it's hard to find good deals, it will be then easy to find capital. So just really recognizing where we're at in the market and what is the opportunity. Like I have zero problem finding deals. I mean, we could get off this call or do it right now, and we could just call 10 brokers, and all of them, the way I would do the conversation, we'd find motivation and a good deal in almost all 10 of those brokers. But then the challenge is, how do we find people that want to invest? Because either money might be scared or money might, have too many deals, because everybody's got a good deal that thinks this way and is seeing this market this way. So this process that I've gone through in finding capital and talking to capital partners, it's been a journey, like a year. But that's the beautiful thing about life and real estate is like if you're consistent and you stick with it, like things do get better and you get better and you get better connections. And I mean, yesterday I had a call, fingers crossed, with a group that they like our story. They agree with the thesis of the market. And they're like, we basically want to be your capital partner for all your deals. We want to have a first right of refusal on all your deals. I've never heard someone say that, for capital to be the first right refusal on our deals. Whereas I was getting refusal from everybody, 8 months ago. So
first right, last right. They just
yeah. So like these conversations now on the capital side, like everyone's getting bigger and better, and new doors are opening and new connections are being made. But it's such a good opportunity to scale up right now while the market is the way. This is what you dream about or you hear about as an investor when you become a different player through this cycle.
Yeah. And listen, I know it may sound, self-serving to talk in this manner, but I do think it's really important for people to understand it, right? Like this is one of the things that we always talk about is looking for opportunities and staying confident and ready to go in that moment. And to your point, the last 4 or 5 years, there were certainly opportunities. The market was hot and a lot of people kept investing, and we invested as well and did pretty well in those deals. On most of those deals, what I would say though is you always look at investing like you're buying toilet paper, and it may seem silly, but you always need toilet paper, right? But if it was on sale, wouldn't you want to buy more and buy in bulk?
Yeah.
And that's where we're at right now. You talk about being able to buy properties for millions of dollars less than what it traded for a couple of years ago. Properties are on sale now. And this is something that we've all been waiting for. And when it's overpriced, maybe you hold off and you say, do I really need it right now? Can I get through? Wait, it's like with buying gas, right? Same thing with anything. If you feel like it's a little bit overpriced, if you absolutely need it or you find a good opportunity, great, you do it. But otherwise, you're going to wait and be patient until you can find a sell. And this is that sell opportunity. And for investors, it's a great time to go out there, especially if you stick to basic fundamentals of investing and find great properties that fit your investing needs. I think part of the challenge is a lot of groups started to move away from that, whatever their investing philosophy was, to do it just to do a deal. And that got a lot of groups in trouble there. Talk to me about kind of how you approach it. Are you looking at your debt terms? Are you looking at certain metrics? Like, how do you define a good deal in your eyes?
Yeah, good question. I also want to touch on what you mentioned. I think that I'm so hyper focused on Austin, Texas and San Antonio, Texas, that maybe what I'm saying as like the general like landscape is different, because I have seen that and I don't know exactly what. I'd love to get your take on this, but like basically here, I think Austin and San Antonio just got so competitive and prices went so high that anybody doing deals then was different than maybe other markets. But like when you're saying that you've done some of these deals and they were okay, my question is, were they big deals? And two is like, were they worth significantly more 5 years ago than they are now? Because that's kind of the landscape I'm seeing in Austin. But I have talked to people in Boston or New York, and they're like, no, we're not seeing that. And I wonder if it's just
it's
crazy.
Definitely. So as we know with real estate, it's all local, right? And what I'll say from a generality standpoint, the Midwest and the Northeast have a different experience than the Southeast and the West. The Southeast and the West, I think what you're seeing in San Antonio and Austin is similar to what you see out West and in most Southeastern markets. But the Midwest and Northeast, you got to keep in mind, they didn't go up as much. And you didn't have as many developers and new development and new supply come online in those markets. So for us, our rents continue to go up. As a matter of fact, like I'm in Cincinnati, and in our markets, we still saw strong rent growth. And if you look at the latest rent growth figures, the top 10 is pretty much comprised of all Northeast and Midwest markets. I think it's Cincinnati, Columbus, Chicago. I can't remember the other ones up there, but like I know 3 of my markets were in the top 6 or 7. So it's local. It doesn't mean we don't recognize what's happening on the national level, but I would also say this is why it's also important to stick to the fundamentals, because what happens is sometimes it changes. And I think so many people focus on things like population growth and job growth, and those are super important metrics. However, when everyone then runs to develop, and now supply comes online and rents are shooting up crazy, and they're mostly catering to A-class residents, luxury, or rents are, $1,500, $2,000. You start to build a little bit of a bubble there, and
Right.
for us, at least, we're more workforce housing, B-class properties. No one's really building that. You can't really build that affordably in this market here. And even if you could, if I asked you to build that in Cincinnati or Phoenix, you're probably going to run out to Phoenix, given material costs are going to be the same or comparable. So we just didn't see that same run up that some of the other markets saw. But again, I think this is why you've got to, when you know your market, though, I think this is why, and I spent a lot of time looking back at, trends of what happened in the last economic recession and how long did it take certain markets to recover and why did it take those markets so long to recover. And it's really a lot of the same theories playing out, right? It comes down to people get super excited, they overbuild, jobs slow down, and things kind of settle. And then again, some of these other markets, they don't grow as fast because there's other restrictions in place and maybe governmental restrictions or others. So they don't have that big pop, but I don't think they have that big bounce on the downside as well.
That makes sense. So I'm with you. And then the other thing I would be curious about, though, is the debt, right? Because depending on what type of deals people were doing, I mean, if you're getting a Fannie Freddie loan, you'd be in the fours, right? Low fours, maybe lower than that. Now you're in the sixes. And so these commercial deals, I mean, 5-year balloon, maybe 10, depending on when you bought, right? You bought it at 4 or 5. Now you're at 6 or 7. And so I guess that doesn't necessarily mean that, you're forced to sell. That does have a challenge to it. That's not particularly about your deals, but just the market in general. So then you have the price being lower and the debt being higher. That's a double whammy.
Yeah. The cost of capital is so much higher. It makes it really hard for deals to pencil, right? Even to your point, even if you have a deal where you've been able to drive the NOI marginally, it may be completely offset by the cost of capital increase, right? And so, you drove the NOI, but I've got to pay, 2% or 200 basis points higher on the interest rates. That wipes out any gains you may have made from driving up the NOI. So in a lot of cases, that's a big challenge. And that's why what I would say is, as investors, you have to look at the entire picture. I just think it's too simplistic to say, hey, don't buy deals that have bridge debt or only use this or only do that. Like, you really have to understand the business plan. And I don't know if enough people think about real estate investing or multifamily investing as a business with multiple factors that you have to consider. Some of them economic, some of them out of your control, some of them, consumer demand. But you have to take a look at that larger picture and put together the right business plan, but also recognize, okay, what could derail this business plan and how do I get ahead of it so we can pivot if we need to pivot?
Yeah, that for sure. And having the right team in place.
Yeah, absolutely.
But so is your thesis? Because if things get better, if rates go down, which we anticipate that they will, we don't know when, but the market just becomes so different, then it goes back to kind of what it was. And these are typically 7-10 year cycles. I mean, it's literally just studying the ups and downs, and it feels like we're at the low or getting to the low and then on the way back up. And so whether it's 8 months or a year or 2 years, my whole point, it's not necessarily like, hey, come do my deals, but be active right now. Specifically for Austin and San Antonio, these deals that people were buying, they didn't cash flow. Now they do. So to your point, the metrics that we look at are basically, do they cash flow immediately? Our deals we're doing right now are 7 to 9%, immediately, year one. Can you get some sort of good structured debt like the one we're doing where it's fixed for 6 years, or maybe you have to buy rate caps? But the key on these particular deals that makes them so good is they're very low equity to acquire them because we're assuming the debt. So the LTV is really high. So on a $35 million deal, we might only have to bring $5 million to the table, where we should typically have to bring 10. And because you only have to bring 5, the return metrics are really high. right? Like we're factoring like some of these deals, $300 rent increase over 10 years, like $30 a year, and selling them at like a 6.5 cap. And it turns into like a 5x multiple. And as you mentioned, there's all kinds of things that you have to figure out in the business plan and the strategy. And the other thing to really harp on is like finding out who the GP team is, right? Some of these capital raisers that do these deals, they just met each other or they just are getting into business. And you want to be around people that have been through it together because there will be challenges. And that's who you want to be investing your money in, is people that figured things out as a team and they didn't just meet each other last month.
Yeah, I mean, you have some great points, right? First and foremost, just understanding the economics. And it goes back to the basics, right? Where you're investing in a property. If it's an existing asset, you're buying that property / business based on its current performance, right? Not necessarily just future projections, which is what a lot of groups are doing, right? You always look at it and say, yeah, it's not making money now, but we're going to do X, Y, and Z, and then it's going to make this. Now that just doesn't fly. So now you're looking at it, you're going based off of your in place cash on cash returns. What are the going in metrics? And then, yes, you want to have flexibility to be able to drive the rent growth. Maybe you're, being a conservative on how much you can push rents, but that's giving you some flexibility in being able to execute the business plan. I just think it's a smart approach that investors have unfortunately had to kind of get pulled back to the basics, but it also makes it easier for guys who are active in this current environment, guys and gals who are active, because you're not going to see as much competition. Because again, those groups who are looking to make a 2x return in 2-3 years, they're not going to invest in this environment because it's too unpredictable for that. So if you can play the long game, if you can be patient, there's definitely great opportunities that are out there. Can you talk a little bit more about just deal structures right now? We've talked a little bit about these kind of motivated sellers. You mentioned on, that one random example, but having to put down, say, 5 million instead of the 10 million, like, how are you able to structure these deals where you're bringing less capital to the table and being able to create a win-win environment for your investors?
The only deals that we're making sense of right now are loan assumptions. And it might be a loan assumption that we buy a rate cap on for 3 to 5 years, or it might be a loan assumption like the one I mentioned where the debt's just really good. And the whole dynamic there is the debt's better than you would get now. And the LTV is significantly different than you would get now. So we haven't figured a way to pencil any deals that we'd be getting new debt on. It's all just taking over existing debt and structuring something creatively. And that's back to just finding the opportunities within the market, within the time frame. And just real quick, the last thing back to what you said, I just thought of this on the competition. There were just a lot of people that got into the business because it seemed cool and it seemed easy and it was like their first deals and they're making, these fees, and there's a lot of them. And it was, like I said, the money was easy. I mean, I saw people raise money in like 24 hours, 48 hours. And this is here. And, once again, I'm hyper focused Austin and San Antonio. And so like, there's a lot of negative articles about Austin right now, like, hey, rent's declining and things like that. But in the long run, man, these are growth markets. They're in Texas, they're jobs and people, like you said, that you have to think about the bubble side of it. But if you can make them pencil now, immediately, that's the win. But the deals are the creative, number one, motivated seller. Number two, something unique with the debt and the low equity required to buy the deal. And then I'm just on the path right now of believing this window, like now's the time to go as big as you can. Got to be smart about it. Can't get away from the fundamentals. But sometimes you have to take a little more risk when the market's designed the way it is. Now's the time to take risk and not to take risk when things are crazy and the risk is, 3% rent growth every month or every year, right? Or 5% every year. And so back to how we analyze them, like pretty conservative. I mean, when you're talking about $300 over 10 years in a growth market, that's pretty good. And then the debt, that cash flows immediately. Now the challenge is, and like things will come up, right? Like who knows what will happen once we own them and start managing them. But never realizing that the challenges are over. Like you got to stick this thing all the way out until you sell it. And you can't forget about it because it is a business. It's not, especially when you're doing multifamily, like it's not a house where you don't have to think about it, but these multifamily deals, you can be tweaking things constantly on what's more efficient and how can we make more money for the investors.
Yeah, I love that. And I think you're spot on, right? Just thinking through like the investment doesn't stop the day you sign the paperwork. Like you get the keys, like that's the first day. You got to go and execute. You have to manage the managers and oversee the asset and make sure you're continuing to deliver on a day-to-day basis. So really important to understand that and recognize it's not just about finding the great deal, structuring the great deal, but you actually have to execute that deal as well.
I was telling my partners like, hey man, I'll move out there and live in one of the units. And they're like, you don't need to do that, man. Just go out there and, you don't have to live there, but you can go there. And the more you talk to the other apartment complexes and the managers and all those things provide significant value. We're closing on this 200 unit tomorrow and we're all three going out there. Do we need to be there? Not really. But it will bring value and we will see results from that. So didn't mean to cut you off.
Yeah, no, I just wanted to go back, right? So when you look back on your journey to get to this point today, you talked about a few different investing strategies. You're on the brokerage side. You did a few other things investing wise before kind of landing in this space. Talk to me about maybe those key moments where you decided, hey, I need to do something different here. Just give us a little more context of like your journey.
Yeah. I mean, a lot of it is market based. We were making money and finding deals in Austin when things were crazy, and we've got all these real estate agents. So we were seeing things that other people didn't see. And now buying these bigger deals, we're doing something that other people aren't doing, or maybe seeing something. So it's very much like living and breathing it and just thinking through what is it that sets us apart, this opportunity within the market and within real estate. So we're buying multifamily now because of this thesis, right? But at my core, I'm a deal finder. I'm a people person. I love partnering with people. I'm signing on loans with different guys and buying an RV park in Arkansas and just creative things like that. But it's really just saying, what is the opportunity? And that's the beautiful thing. And that's to being an entrepreneur, right? Like this is for probably most people in real estate, not for everybody, but we get into real estate because we don't want to have a job. And if you just do one thing, you might have a job, right? But if you're entrepreneurial and you're creative, you can think through how do we adapt, right? And so like right now it's multifamily. In a couple of years, who knows? Maybe they say you can't build any more RV parks. And all of a sudden we're looking at RV parks or this or that. But it's just always being open-minded with the ear to the ground, talking to everybody, asking questions, like even just talking to you, like, I'm trying to like understand your mindset a little bit and I'm asking you and I'm thinking through it and I'm learning like, as I'm so hyper-focused on Austin, things I'm saying aren't necessarily true for the whole country, but that's good. I need to get back to like, hey, I'm the Austin guy, San Antonio guy, but just really always being open-minded, seeing that after I bought 60 single-family homes, man, these houses don't make any money. This is in Austin. Like I said, maybe in the Midwest they do. But when you have to pay $6,000, $7,000 taxes and $2,000, $3,000 in insurance and your rent's $2,000, maybe you make a little bit, but not really. And so my general thought is bigger the better in real estate, depending on your goals. I mean, you could go buy 10 houses cash and retire, right? But I'm trying to like do something a little bigger, ideally, but really to do something that I can scale as well. And so just honing in more and more on what I like to do and how I do it. And for me, like, I feel very blessed, man. I'm the people person, networker. My two partners are operators. One of them is my best friend. And, both of them essentially are my best friends, but one of them I grew up as, he was my best friend and he's a Navy SEAL. And so like having that trust and like being like, all right, this is what I do. How can I maximize what I'm good at? That's kind of an evolution versus like always just chasing something random. But it's like, I'm looking for connections and people and how do I stay in touch? And John, how can I add value for you? And how can we be talking in 10 years? That's my lane. And that leads to different things that I don't know exactly what that might be. But it feels entrepreneurial. And that's why, like I said, we got into this business. But back to the just general bullet points, like single family homes doesn't do it. 10-unit mobile home doesn't do it. There's so much more work than you might think. I mean, I talked to a guy who, and sometimes, you give your advice and you got to take it for what it is. But like this guy that was a firefighter and he wanted to get into real estate. And he's like, my plan is to buy, 15 houses over the next 10 years. And I'm like, dude, it's not a good plan, man. It's not going to be good. It's not going to do anything for you. Like, just buy a 50 unit right now. And whether that's right or wrong, that's just my take, right? And he can do what he wants with it. But I've just seen it and lived it. And like, even to the point where when friends call me and they're like, I'm like, you shouldn't buy your house. Like, you can buy it if you and your wife are going to be happy there. And I'm all for that. But don't buy it to think of it as an investment, because it's not. And maybe you will make money, but like the chances are you won't. Like, just if you're trying to be an investor, rent it and buy and invest in something else.
Yeah, Matt, I appreciate you sharing that, man. Yeah, man, but I think it's a lot of value in understanding that, right? And my takeaway is this: one, for you and your journey, just being around real estate at a young age, you knew this was the thing. Starting out more on the single family side, doing some investing, brokerage, helping out other agents. You spent a lot of time really getting to know your backyard, which informs how you transitioned into the multifamily sector as well, right? You're focused on San Antonio and Austin. It's your backyard. You know that area really well. And for our listeners, figure out what your competitive edge is. You may not have grown up around this space and maybe you didn't learn all this at a young age, but we all have either skills or just geographic advantages. I'm talking about being here in the Midwest. Well, that was not an advantage 3-4 years ago, I promise you. Now everyone's seeing the reports talking about how the Midwest rents are growing and it's so strong. And I just sent something out about that yesterday myself. So you have that. You got to figure out what your advantage is and use it to your ability. Maybe you have time on your hand. If you're young and you don't have any money, but you got time, leverage that. If you got money and no time, leverage that. But figure out your skill, figure out your advantage, and use it to help propel yourself forward. And that's going to help you grow. The other thing, though, is understand your skill set. And when you talked about your skill set in particular, you mentioned just being the networker, being the guy to go out there and make the connections, to develop teams, to learn, to connect with others. And that's really important because that allows you to get clarity. You can talk to brokers in a way that may be different from some of your partners who are more, maybe dry and cut and paste with it. You can actually have that conversation and say, hey, man, talk to me. Like, what's going on here? You can build that rapport. And that's just really important to know as well. If you're not good at numbers, don't waste all your time trying to underwrite. Go get somebody who can underwrite. Who, not how. Figure that out. But I think it's really important to learn from other people's journey. And that's my takeaway on yours is like really get good with what you know. That's your market. That's your own personal skill set. You've kind of tripled down on those two things. And that has allowed you to grow and scale. And here you are with 1,000 units under contract here in 2025. So appreciate you sharing that. Hey, Matthew, if folks want to learn more and connect with you, what's the best way for them to reach out?
I'm easy, man. I'm all over, Matthew Teifke on any social media. TR3 Capital is my company. That's on, all channels, Instagram, Facebook, Twitter. Matt Teifke at Gmail is my email address. If I can share my phone number, it's 512-914-4806. 512-914-4806. And one last thing, if you don't mind, John, I didn't touch on this too much, but I really believe in this, like just being a support for everybody, like just willing to help and talk to anybody and not being above them because they haven't done any deals is something that I've always done. And that leads to significant value that I don't think a lot of people see, and playing the long game with it, right? Like I'm trying to reach out to some big dogs and it's hard for me to get a hold of them, but eventually I do. And then I stay in touch, but they don't approach things the way I do. Whereas like I'm, willing to talk to everybody, high school kid, college kid, big dog, this dog, whatever. We're all people. And it's easy to stand out in real estate when you don't act a certain way or have a certain arrogance. And it goes a long way. And this is a very long game, right? And so I think too many people move too fast and make connections, but then they move on and like try to stay in touch and add value. And like I said, if me and you are talking in 5 years, 10 years, there's no doubt we're doing something, whether that's making money or just supporting each other. But I think too many of us, myself included, I'm by no means perfect in this. We move too fast and then we just like move on. But we need to like dive deeper into these relationships in a real way.
I love it, man. Great insight there, and a great reminder for all of our listeners. Hey, if you enjoyed this conversation here, make sure you join our best ever community. We have a lot of conversations like this on the app. It's a great way to engage with other best ever listeners as well. Not to mention the hosts who are on there on a day-to-day basis. So check us out there, bestevercommunity.com. Matthew, thanks again for being a great guest here on Multifamily Mastery. We look forward to staying in touch with you, and I hope you have a great day.
Thanks for being a great interviewer, man. I loved you really hearing me out and asking great questions. I could feel it, and appreciate you and the listeners.
Thank you.